Hi everyone, welcome back to my channel. So there are a lot of stock trading tips out there from a plethora of people, and some tips will be more useful than others, but ultimately what is most helpful will depend on what type of investor you are. If you're a high risk, high reward type, this might not be the video for you, but if you are someone who invests for a long term and takes occasional higher risk, this video is for you. For my quick tips, I'm picking 3 that resonated with me the most. Part of being a good investor is not just picking the right investments, but also avoiding the bad ones, which lead me into my first tip. Don't buy into the hype too late. Case in point, Bitcoin. Good old Bitcoin. Just a few years ago, everyone was talking about it. At the height of the market, it seemed like every person you meet was in some kind of crypto business, from crypto researcher to crypto engineers. Everybody had their job titles tied to crypto somehow. I recall going to Best Buy looking for a laptop one day, but somehow ended up talking to a random guy for 15 minutes about Bitcoin. Then the next day I was going to my barbershop for a fade, but ended up talking to someone right next to me again about Bitcoin for God knows how long. It didn't matter if you were a high school teenager or you were some successful millionaire, the topic of Bitcoin would just inevitably come up. I remember the first thing that came to mind when talking to anyone who knew crypto was, how many Bitcoins do you have? You automatically assume that person was a millionaire that they bought around 2015. There was definitely a cachet for anyone involved with Bitcoin. It's like, if you didn't own Bitcoin, you were missing out on something that was going to be massive. It would be like something larger than anything we've ever seen. And to some degree, it was. Around December 2017, early 2018, the price of Bitcoin was at 20,000. Heck, even Tai Lopez had a course teaching about Bitcoin, charging hundreds and hundreds of dollars. I vividly remember I was literally one click away from buying $10,000 worth myself when it was trading around 19,000. Now it may not seem like a lot, but it was going to be on something I knew nothing about. I tried to learn more about Bitcoin, but never got a full grasp on how it really worked. Long story short, I would have lost 50% in just 2 months if I had bought. I'm not saying Bitcoin is a bad investment. As a matter of fact, Bitcoin has been steadily going up since mid-March. Not quite to its all-time highs, but halfway there. Not to mention, this is while we are having a so it definitely shows some staying power. So the takeaway here is to not buy anything when there's crazy hype and it's at its all-time highs. Well, you might ask, when do I know? How will I know if it's at its all-time highs? Well, easy. You'll know you've reached this point when everyone from a 10-year-old to an 80-year-old is talking about it, and they have no idea what it is that they want to buy. Call me a scaredy cat, but I'm more interested in investing in somewhat more safe, like index funds, and invest for the long term. Moving on, invest in companies you understand and will use. The stock market recently has been a roller coaster. Almost every day you see companies going up, going down, big swings. Big companies like Tesla are gaining or losing 10%, seemingly every day like it's the new norm. While I've been tempted to buy Tesla, hoping to jump on the bandwagon, I decided I'm not going to, even though I do understand cars. The main reason is that I don't drive a Tesla. Without actually owning a Tesla, I can't tell if the product's actually any good, nor can I tell whether the cars that they're building are getting any better. Apple, however, I do use and I do understand. Every new generation of iPhone or AirPods are compared to their competitors like Samsung or LG, which by the way, I also use. Most of us know that Apple is a good company, but it's been trading so high that I've never bought in. Well, at least right up until March of this year. I bought Apple at $250 a share. I had to pull the trigger this time, because honestly, I'm not sure when we'll see another 25% drop in price for the stock again. Next, Warren Buffett says, be fearful when everyone's greedy and be greedy when everyone is fearful. I hear that so often, I'm sure you have too. So I definitely agree with this quote, and I'm incorporating this to my own investment strategy. To me, this is also a bit of a gamble, because as much as I believe in this idea, there's always a certain amount of risk that comes with it. There could be a situation where there's so much fear because the company is about to go bankrupt and you see everyone selling. Having said that, I'm gonna be greedy when everyone is fearful, and I'm gonna gamble just a little. I'm buying United Airlines even though there has been massive sell-off and fear. I fly United all the time, so I can see how they operate and how they treat their customers. I find myself asking, do they have a good system? Are the planes nice? Are people mad when they get on the plane? And so on. I also fly Delta Airlines, which is why I can compare the two. If Delta eventually offers more value, I may want to buy Delta stocks instead. I know this is just one of many ways to analyze a stock, and we can definitely go into a company's financial in a future video, but for this video, I want to keep it simple. Currently, I like United more. Their planes seem to be newer and their seats are better, especially in their business cabin. Plus, food is also a lot better. I'm also buying Marriott, the hotel conglomerate, which is another industry that's been hit hard. Most people are running away from these stocks, but I feel like it's dropped so much that it's really a bargain right now. So far, these stocks have been going up and down, and so far I've seen about 8% increase since I purchased the stock. Hopefully, when things settle, when the economy opens up again, it'll go up way more. Another reason for buying these two stocks is because I actually use their services. Not only do I fly and stay with them, but I also use their credit cards. And if you haven't watched my credit card video, click over here. In a way, by flying United and staying at Marriott, I'm helping these two companies grow, which in turn helps me make more money when their stocks go up. Not to mention, I also get reward points that I can use to redeem more of their services, which is a pretty good cycle if you ask me. If I lose everything because these companies end up going bankrupt, I'm okay with that. And I've accepted that there is that possibility. Basically, it's money I can lose and not money I need to put food on the table. Maybe I can call it calculated gambling. These stocks are at a discount now because no one is really traveling, but I'm sure the industry as a whole will bounce back because people will always have to do essential travels for business or family. It's never going to go away. On the other hand, stocks like Norwegian Cruise Line or the entire cruise sector, for that matter, is very much riskier. I know people that are making lots of money by playing with options, but I think it's very risky when it comes to Norwegian and all these other cruise lines like Carnival, especially when cruise lines will always be considered leisure travel, and it's going to take a long time to bounce back. Obviously, there's no guarantee on anything, and you shouldn't just listen to me without researching yourself because, as you know, I'm not a financial advisor. Lastly, I'm also buying Johnson & Johnson and Moderna, which is 100% speculation. These are pharmaceutical companies that are working on a vaccine for and they're looking pretty promising. They're on the final testing stages for the vaccine, and if either one of them can beat everyone else in the world by coming out with the vaccine first, I'm pretty sure their stock will have to go up. Obviously, if they aren't successful, then the stock will take a big hit because there are already many people betting on them to prevail, and the stock has already been going up. Basically, I'm putting only 5% of my portfolio money on these two companies, and if things don't go as planned, I very well may be kissing my money goodbye, which I won't be happy with, but I'll be okay with. If you like a safer approach to investing, your best bet is buying index funds, which I will cover in the next video. So in summary, there are 3 things we should follow. At least for me, it's been helping me a lot. Number 1, don't buy into the hype, especially when it's too late. Number 2, invest in something you understand and you're gonna use. And finally, number 3, be fearful when everyone's greedy and be greedy when everyone's fearful. All right, guys, be sure to like my video and subscribe if you wanna see more content like this. I'll see you in the next video.